Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after Tuesday's RBA rate shock, the market still holds relatively well around that 72 handle. In light of the pattern though, we should keep an eye on the RSI as the market may slip slightly into the European session, but I still feel the bulls are lurking around that 71.45 level after seeing at least two challenges to that region and rejected. If so, this pattern should continue and eventually clear the top side of 72.55, 65, 60-day moving average, and then furthermore look further to 73.25 to 73.70. So in the short term, a small pullback, but I'm still overall bullish. Looking to this week, as the market heads to Thursday, we've got the European Central Bank, or the ECB, rate decision. The ECB is expected to confirm an end to its bond buying this month. However, investors will be looking for clues on monetary policy as bets on interest rate rises from the ECB look more convincing this year after data last week showed the Eurozone inflation at a record high. Meanwhile, 50 basis point hike may be on the cards from the bank and looking, that is, up towards October. But this Thursday's meeting is likely or widely expected to keep rates on hold. Looking at the pattern though, we can see the market still holds around the 106.25.30 support zone and therefore may see another challenge there, but a rejection is anticipated. The dollar index, which measures the greenback strength against the basket of six major currencies, currently holds above the 102 area since its rebound overnight. Along with that, we still have this Friday the key US Consumer Price Index, or the CPI, with a forecast pointing to a further slowdown in May, with the CPI expected to ease to 8.2 and the core CPI forecast to drop to 5.9. The CPI did rise to 8.3 in the year of April and down from 8.5 from March. So we may have seen a peak from 8.5 if we do see a slight pullback to 8.2 this Friday. In light of the pattern, the broader pattern that is, so I'm looking for 106.25 to 107.85 as an intraday range. The dollar yen rallies higher and now refreshes its 20-year highs as the Bank of Japan bias holds to monetary policy easing in contrast to the US Fed's policy tightening measures, which has supported a weaker yen and a stronger US dollar. In light of the pattern, I'm still holding to a neutral bias, even though as we are overbought, could still see an extension anywhere up to 135. So I'd rather sit out at the moment because the market's most probably soon going to get into a very whipsaw price action if we do possibly see the Bank of Japan intervene at these high levels. Sterling rebounded very aggressively overnight after the market found that British Prime Minister Boris Johnson's win on a no confidence vote. This has kept the momentum going for the pound. Although Johnson did survive the vote, he suffered significant political damage as 41% of Conservative MPs voted against him, focusing on two elections on June the 23rd, which would further undermine Johnson's position if the Conservatives lose these seats. Meanwhile, with more rate hikes from the Bank of England, could see further gains for the pound and eventually clear that top side of 126.05.45 as it challenges this level and maybe on towards 127, which I do favour. Sterling Kiwi, well, the market's marching higher in its fourth consecutive day and now looks towards the area of 195 as a potential target. Like previously, we've seen many upside tests fail, and I do feel we're getting quite close to that level again, which is at 195, and maybe see a downturn. Finishing off with gold and oil, the market coasts sideways as it still holds in the middle of the range and looks for direction. However, I feel from the broader sense that we could actually see eventually a pullback towards 1,825 to 27. And with the top side, broad top side, that is, around 1,878 to 82. Oil still maintaining above this level of 115.45 to 55 Now I feel if we do get a sustained break here, that would give further losses to 109. However, the market's not really convincingly showing that kind of a weaker play into tonight. However, there is divergence to the bear case, so upside attempts may fail again, but I won't at this point rule out 121 as a potential challenge and likely to fail. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the rest of the day.